Well, hello again, everyone, and welcome back to Cotton Grower Magazine's Cotton Companion Podcast. This is Jim Stedman, Senior Editor of Cotton Grower, and man, are things moving fast in fields across the cotton belt. We're going to talk some specific USDA numbers in just a few minutes, but between planting wrapping up, early season weed and insect treatments, PGR applications, and unfortunately some replants, there's certainly not a dull moment in cotton production right now. I'm joined again today by my own cotton companion and colleague, Beck Barnes. And Beck, we didn't even mention rain in West Texas.
Yeah, we sure didn't. Yeah, there's so much going on, but it's funny. I was chuckling thinking about it earlier. Most people get their weather. We know very intimately. We follow farmers' media intake patterns, and we know that there's two things that our readers are interested in. Number one is the cotton market and pricing. Number two is the weather. Y'all check the weather every day. I never do the weather channel. I don't have the weather app. I use Ag Twitter as my weather indicator. And so, I guess it was around May 11, 12, 13, somewhere in there when all that rain came through on the high plains and a little bit onto the Caprock. And I got that from, follow my buddy Tom Gregory's tweeting his rain gauge picture and Steve Verrett's tweeting a picture of the cloud in the distance. Anyhow, so Ag Twitter is my weather channel basically. But I saw that big rain come through. I know it was a welcome sight for all of our guys out there on the high plains. I was happy for y'all and maybe get some moisture in the ground, get this crop up.
Yeah, well, over the last couple of episodes, we've talked, spent some time talking about new technologies, Farm Bill. We did a production update live from a turn row. And we've talked about a big milestone anniversary for one of the industry's longtime companies. But during that time, as you've mentioned and alluded to weather and markets, the market has continued to grow. But there's a certain dash of volatility and a pinch of other influences that are kind of making market watching a real adventure, particularly as we approach the end of the 2021-22 marketing year. So in that light, joining us again to help make sense of this current market environment is our good friend, Dr. O.A. Cleveland, Professor Emeritus of Agricultural Economics at Mississippi State University. And as usual, he has his opinions, and he's certainly not afraid to share them. So be sure to stay tuned for what's always a lively and informative discussion. Before we get to that, let's take a look at a couple little news items. I mentioned the USDA numbers, and the USDA crop progress numbers for the week ending June 5th is showing that 84% of the U.S. cotton crop is now in the ground. That's up 16 percentage points in the past week and 8 percentage points ahead of the 5-year average for this week. In all, 13 cotton producing states are currently ahead of their respective 5-year averages for planting, with 10 states showing planting rates already above 90%. We're starting to get first reports of squaring. That's now reported in 11% of the U.S. crop. That's up 4 percentage points in the past week and just barely ahead of the 5-year average for the week. And cotton condition has improved slightly over the past week, with 48% of the crop rated good to excellent, 37% rated fair, and 15% rated poor to very poor. So we're off to a pretty good start for the season.
Yeah, that's what I was just thinking. It seems like it's been a pretty, U.S. cotton belt is so wide and varied in terms of the conditions that people experience. But on the whole, it feels like it's been a pretty good planting year to this point. So that's good. Happy for our growers. Jim, another development for our growers has been the U.S. Cotton Trust Protocol, and it's continued making some positive moves as it seeks to enlist U.S. cotton growers. In the past several weeks, we saw a report that said grower participation for the 21/22 crop has doubled since the program's pilot began last year. So that's amazing work from the folks at the National Cotton Council. Right on the heels of that announcement came word that the Trust Protocol is implementing a new streamlined 3-year grower enrollment program from the 2022 through 2024 crops. And that's designed to allow grower member cotton to enter that supply chain more quickly, more easily, and more efficiently. So the new process, this new enrollment process is going to allow participating growers' production to be more easily identified and uploaded into the protocol platform. and it's paving the way for potential redistribution of program revenue. To assist themselves, growers can authorize their crop consultants to enter information on their behalf, so we can utilize our helpers out there in the consultant community, as well as relying on the new John Deere Operations Center to pre-populate up to 40% of the data that's needed to complete the field print analysis. So, they're really kind of putting it on a platter for guys to try to get involved. I know that we've heard that the signing up for this Cotton Trust Protocol program can be a heavier lift, but it seems like the folks at the protocol, folks at the council are doing everything they can to make it easier for you to get started. Now, as before, all data entered into the program is secure, it remains confidential, and it is only used in an aggregate form for those of you worried about or not worried, but considering your privacy. For answers to questions, visit the website trustuscotton.org or contact the Grower Help Desk at growers@trustuscotton.org.
And now we're going to open the Cotton Companion virtual studio and welcome back Dr. O.A. Cleveland, Professor Emeritus of Agricultural Economics at Mississippi State University, a frequent contributor to this podcast and also to other industry reports. O.A., welcome back. This seems like a pretty good time to try to get a handle on this market as the old crop and the new crop are kind of converging right now.
It is a great time to do that, and thank you for inviting me back. And I can't wait for you to tell me how they are going to converge and come together. I want to know that.
You're asking the wrong guys.
Yeah.
So are you.
And we just lost our audience right there. But seriously, the tipping point for me, and I think you and I kind of sent some texts back and forth to each other about this. The tipping point for me last week was the announcement that International Cotton Advisory Committee was temporarily suspending their price projections due to high volatility and extenuating circumstances in the global markets. So basically, they're saying it's difficult for any model to produce accurate and useful information right now. How did we get to this point?
Well, that is a very interesting question, and I can only speculate, but the market, as ICAC indicated, and if we've talked about for some time, is highly volatile, and we have a situation that I don't recall ever encountering. Maybe we have, but I don't remember it. Whereas mills in large volumes have tended to wait until fixing the price of their cotton on their own call sales until literally the very end of the marketing year. We see this every year, but we don't see it in the volume that they have so many millions of bales that you go down to the last 2 months, last 3 months, last 2 weeks that have to be fixed. And when you fix that sale that the mill has bought cotton and the merchant fixes that sale on behalf of the mill, that means the mill has to buy cotton futures. And we have had a ratio of buying versus selling of anywhere from 12-1 down to last week, it was 10-1. And 10-1 is still bullish. It still says prices should go higher, i.e. meaning that mills still have much more cotton to buy than people have to sell or than growers have to sell. So the buying pressure just takes prices higher. But we also have the options ring, which takes care of some of this. And also, and that's a silent partner. We don't see that activity, whereas we can see the futures market activity. And additionally, it appears, and this is only to say it appears, can't be documented, that merchants have allowed mills to delay their pricing past the July point, which always historically has been sacrosanct, that you had to fix your price before first notice day of the July futures, which this year is June the 24th, just about 10 more trading days, 11 more, 10 more. So we're going down right to the end, and one day textile mills come in and fix price. And the prices run up. In the next 2 days, they don't fix prices, and there's absolutely no market for cotton, and prices just fall out the bottom. So it's made it highly volatile. And we talked about the new crop being down around $1.20 a pound versus this old crop around $1.35, $1.40, maybe $1.30. So it tends to start to tell us that July has to come lower and lower. And we just have to find that bridge to get there, but it's pretty dadgum late to start building that bridge to get from $1.35, $1.40 down to $1.20. But we're beginning to see those bricks laid one by one in building that bridge. And it appears that July will come down further. Now, that's not to say that July may not be up a nickel today or a nickel one day next week, a limit move, but in the next 2 to 3 days, it'll probably be down as much as 7, 8, 9 cents. So historically, the July contract and the December contract will come somewhat together, almost together. And we're in the process of seeing that. It's taken literally just 2 weeks before first notice day before we're seeing much of it, but it's beginning to peak its little bill out and suggest to us that that's occurring, but it's still highly volatile.
Well, I think that's, and that's one thing that we've been looking at, or I've been kind of tracking a little bit over the last couple of weeks, as we were at the mill level, particularly, we were starting to see some slowdown in cotton demand, I think, because of price and basically saying it's too expensive, and coming back then to something we've always kind of set in the back of our minds is, they can't pass that cost on, all that cost on down. And they're starting to shift over to some of the man-made fibers and looking at more blends and things like that. And then we saw some mills in India that just basically shut down, for a week or two to protest high cotton prices. So as we're moving into this July number and taking it back down to $1.20, is that going to make the price more reasonable, more attractive to mills and kind of start pushing the other fibers out the door a little bit more?
It will tend to. What we have noticed is that once prices slip below $1.40 down into the $1.38 area, we see mills begin to look for cotton, trying to book cotton, trying to buy cotton. Cotton that's been bought on December, cotton that's been bought for the 2022-23 marketing year is beginning to show some volume. So the mills are telling us there that at $1.15, $1.18, $1.20, $1.22, they do feel like that their margin, their profit margin, as we call it, their mill margin, between cotton prices and yarn prices, that the mills feel that they can make money. And we are seeing, once we see coming back to old crop here, once we see this market get down into the high 130s and suggest that we may move into the low 130s, we have in fact seen textile mills come in trying to buy old crop. Now, it's still going to be difficult to get anything shipped over there on time, but we're starting to see very large volumes of shipping on a week by week basis. So it tells us that those mills, that margin is okay for mills if we can get cotton back down into the 130s and preferably down into the low 130s. We have to understand that textile mills don't care, in a sense, what the price of cotton is. They don't care if it's $1.50 or $1.10, or if it's 70 cents. What they care about is what they can sell their yarn for. And the difference in the yarn price and the cotton price, that's their concern. And that's where the mill margin comes in. And when we were at $1.40, $1.45 and making the highs in July, mills were telling us in total that they just were going to stop using cotton. They couldn't do it, that they couldn't sell the yarn. And they began to build a little yarn inventory. With as small as it is, with cotton prices, we've seen July now in the 130s. With July coming back there, the mills are telling us that they have been able to move their inventory of yarn. They're not building inventory. Again, telling us that they can operate with the new crop in the 120s and 115 area.
Yeah, that's interesting stuff. OA had not ever thought about the margins that the mills have with their yarn margins. So that's neat to think about. So anyhow, switching subjects a little bit, we should note today it's June 8th as we're talking to you. And I was telling Jim earlier, I get my weather reports across the Cotton Belt from Twitter these days. And I saw my buddy Tom Gregory out in Petersburg, Texas, tweeted on May 24th. And that's on the high plains. He tweeted a picture of his rain gauge. He had 1.5 inches on May 24th. So, my question to you is, does that rain that they got a good rain out there, was my long-winded way of saying. They got a good rain out there on the high plains on May 24-ish. Did that rain do enough to make a big difference, or is the drought, kind of truly baked in for this season, do you think? And will we get indications of that from USDA's June supply demand report?
Beck, that's a great question because it has been so dry. It has, quote unquote, been record dry out there. And we talked about these heavy rains that might come in late May, that in fact did, as you mentioned, that they would do some good, but in many cases they wouldn't do much good, and they had to be followed by more and more weather. And we're going into the dry season. So once we got to Memorial Day, we did see that good rain out there, and bless their heart, we have had very good moisture across much of the Cotton Belt after May the 24th and into the weekend and the first part of this week. So they have received great moisture. Still, the underground supply moisture system is still very, very, very negative. So they'll continue to need more rain. And there is some dryland area that's not received rain. Initially, with the good rains that you talked about that you picked up on Twitter, that did not cover the dryland area. These other rains have covered the very important dryland area, and they're picking that up. Now, growers are twixt in between because will they have enough subsoil moisture? Will the crop get zeroed out and they can do something else? Or are they going to have to carry this crop with some very limited subsoil moisture? That's why if they have to carry the crop, it's going to be extremely important to continue to get these good rains going into the dry season. So we're a whole lot better than we were. It was the $1 million rain. We say, and I get caught up in it many times. We go right down to the last minute in West Texas before we get rain. That the idea is you have to have a Memorial Day rain, or you have to have a June the 1st weekend rain to make a crop. And lo and behold, it came this year against all odds, as it seems to come every year.
Yeah. Well, you answered my next question for you. I was going to ask you what you're hearing around the belt, but you mentioned, we have seen a lot of rain in South Georgia, across the Carolinas, to the extent that some of them are a little behind on planting, but we think they'll be able to catch up. I kind of want to throw you a curveball. It's one thing to, when we talk about rain, for those West Texas guys to get a crop in. Another topic altogether is, will the markets recognize, these events that happen that impact ultimately production in the U.S.? I hear in my head all the time, conversation I have with my buddy Bill Kennedy in Inverness, Mississippi, back in 2009, and we weren't planting hardly any cotton. We had like 9 million acre crop back in 2009 or something, like very small crop, and yet prices didn't move an inch based on what the American growers were doing. He said, we're discovering that the market doesn't care what happens to us. Do you generally, has that been the case? With that rain happening out in West Texas, do you think the market will respond to that, or will we just have to wait on that June USDA supply demand to see?
Well, I would suggest to you that since about May the 23rd, I don't have the numbers in front of me or what, but we touched $1.32, I believe, in December, and now we're down to about $1.18, $1.20. So the market has responded to those West Texas rains.
Yeah.
We're down a nickel to 12 cents. Now there's some other factors that brought that down, but most of that, as far as the December futures is concerned, is in fact the market was responding to that rain. The world carryover and U.S. carryover is subsequently low enough that a nickel or a dime, let's say a dime out of December with good rains, and that's what those good rains took out of December. We're just down a dime, and we're still at $1.18 and $1.20, which is a very handsome price. And your question may have related more to the fact that when Inverness, Mississippi, or the Delta of Mississippi, and Arkansas and Tennessee, and you move on into Georgia, when it's very dry there and they get rains, does the market respond? Market responds somewhat. It's going to watch that 45% of the crop out in West Texas, Oklahoma, more than it's going to watch the Southeast and the Mid-South.
Yeah, that's a fair point.
Now, I want to shift gears again a little bit, because we've talked acres before. We seem to be fixated on acres for the first quarter of the year, and we all kind of settled on USDA's projected number of 12.2 million acres. It sort of felt like a really good number. The planted acres report is due here June 30th. Where's that acreage number going to end up?
We're gonna hold you to this.
Yeah, right. I think it's wow. That's I get different comments every week from people. I think it's going to be a little bit short of 12.2, but it'll be at least 12 million acres. And again, I have some people telling me that it'll be more, but the seed companies I've talked with seem to be pleased. They're not just ecstatic and excited about seed sales, but they appear to be very pleased. Now, some of those seed sales are on books as sales, but those sales may come back, the seed may come back, so to speak. But I still think we're going to scare the death out of 12 million, and I really don't have any reason to go against the USDA number at this time.
Okay, that's your first prediction. We're going to hold you to. Your second, well, not much of a prediction, but I just ask you, what just generally, as we kind of rounding third and bringing you home here, what marketing advice do you have for our guys, our grower listeners, as that July contract and the new December contract approach? I know you touched a little bit on that earlier, but just generally, bullet point, what would you tell them?
Well, first, let me just make a disclaimer, or probably make a claimer. I got very overly excited when December back in November and October of 2021 and into January, February of 2021, when cotton was above 95 cents, or was it 90 cents? And I think I suggested to growers back then, or not I think, I know I did, I suggested to growers that they may get as much as 50% price at that 90, 95 cent level. And I don't feel bad about that. I mean, I wish I'd been more correct, I will say that. But when you're thinking in terms of hedging, when you're thinking in terms of risk management, you fix a price that you think is good or is very profitable. And in a sense, you hope you're wrong, because you don't fix but a third of it or a quarter of it or even a half of it. And if you're wrong, the other half, the other 3/4 goes higher and higher. But yet you've fixed enough that you know that you can cover essentially a good bit of your cost of production. So, and at 90 cents, you could do that. And now, particularly your question, what do you do now? I would have to say that growers that I have, that literally took my advice, I would sit still and not do anything. I'm very comfortable. That is another way to say that where I sit and look at December today and I don't know exactly, I'll say $1.18 or $1.20. I'm very comfortable that December, while it can come down, I can see it coming down to about $1 and a dime. I think it has just a tremendous support at $1.15 and $1.16. Good price support there. But I would not get overly excited if I have in fact priced a good bit of cotton. If I hadn't priced anything, Again, it's a situation where you hedge it, i.e., you price it, you sell some, you hedge it, and you hope you're wrong. You hope you sell 25% or 50% at today's $1.20, and gosh, you hope it goes to $1.80 because you've got another half of your crop that you're going to make money on, and plus you've made good money on this first half or first 25%, whatever numbers you use. So it's time definitely to do some pricing, in my opinion. We could get good range. I'm not prepared to say, yes, we're in a climate change, but we're certainly seeing some cycles in our climate history. And we may be in a change, but these weather patterns, not only here in the United States, but around the globe, are changing considerably from what I have grown up with and what I've seen over time. So the market's offering us an excellent profit in spite of these fertilizer prices, in spite of the labor problems. The market says it's hungry. It's time to be fed. You need to sell a little cotton. At today's price, if I hadn't sold anything, I've got to go out the door today and sell at least 25%. At least 25%.
Sounds good. And I think that sound we're all hearing right now is our audience rushing to get to a cell phone to make some calls and do what they need to do. So I guess it's a pretty good place to end our discussion today. OA, thanks again for taking time to join us for a look in your prognosticator's crystal ball. We always appreciate that. Sounds like we got plenty to watch and maybe a little bit more to catch up on this summer.
Well, thank y'all. Be very safe. Take care, and look forward to talking to y'all again.
Sounds good. Thank you.
Yes, sir. Thank you, OA. So that's it for this episode of the Cotton Companion podcast. As always, a special thanks to our friend, Dr. OA Cleveland, for joining in. And as always, we want to thank you, dear listeners, for joining us. If you like what you hear on the Cotton Companion, please be sure to spread the word, tell your farming friends and neighbors about the podcast. Here's where and how they can find us.
You can find the Cotton Companion in 3 easy ways. First, go to cottongrower.com/companion, or simply click the podcast tab at the top of the homepage. Second, subscribe to our channel on iTunes or wherever you find your podcasts these days. And 3, sign up for our weekly e-newsletter, the Cotton Grower e-News, that's delivered to your email inbox every Tuesday morning. You can do that by going to cottongrower.com/subscribe. Also, be sure to follow Cotton Grower on social media. We are at Cotton Grower Mag on Twitter. And on Facebook, you'll find us by searching for Cotton Grower Magazine.
Cotton Companion Podcast is produced twice monthly by Tyler Hatch and Kim Henderson, our talented colleagues at the world headquarters for Meister Media Worldwide in beautiful Willoughby, Ohio. My name's Jim Stedman. His name's Beck Barnes, and we'll be back with you in 2 weeks for the next episode of the Cotton Companion. Until then, stay safe.
Yeah, he works and he works and he works and he works all day. God made a farmer. Yeah, he works and he